Good morning, everybody. This is Mark, and we're back here for the morning call. It is Friday. It's a casual summer Friday. Yesterday was an interesting day. A gap up, probably bigger than most of us expected. And, that was a sell at the, sell within the first half an hour, 40 minutes of the day. We did not hold that, we did not hold the open and print. And for the rest of the day, really, it was a slow grind lower. We still closed positive for the day, but at the same time, some of the stocks that really have had 3 to 4 day big travel ranges to the upside have taken a break. Now the key is, how do we strategize for what's going to happen next? In my opinion, we're obviously gapped down a little bit this morning, but it's Friday, it's a summer Friday, so it's going to be a muted action. I would expect over the next few days to possibly weeks to try to form a little back and filling happens, meaning we could grind a little lower. The volume will probably become a little less on the S&Ps, and then some resolution to this pattern. Was this rally really just an oversold bounce, or is it a higher low that's going to lead us a little bit higher later on, obviously going into maybe possibly July? We're still not there yet. There's no resolution with Greece, no resolution with Spain quite yet. So the headline news is still in front of us. That's the key at this point in time. From actionary trades that I would be looking at today, again, understanding that it's going to be muted, looking at possibly an opportunity to get involved in the spiders back to the 131 level. I think 3 days up, 2 days down, probably 131 should hold, and that would coincide again with the 8-day moving average. So something to keep an eye on. From a trading point of view, I know we were interested in gold. We sold it the other day, and yesterday was just a sell in the sense of getting it out of your portfolio. It should have held there. It went back in that gap. It's down again this morning. You got to follow your rules at this point in time. We'll revisit again, but it's now filled that gap this morning. I wouldn't be shorting. If you were short, I would be covering that and revisiting it a little bit later and just waiting to see what happens. The gap fill was basically around 153-ish. Let's go to high beta. High beta, I put the best in breed at this point in time up, which is Apple. This is the daily chart. Hard to tell. You could see the range is getting tighter. I liked it yesterday. I thought it was going to have some travel, a little bit of follow through to the upside. It has not. This is the tightest range in the last 5 days that I've seen Apple for a period of time. I would expect maybe 1 or 2 more days of this tight range for some resolution, whether that's to the downside or the upside. My opinion is probably this moves back to the upside, and you can see the moving averages are starting to curl up a little bit. The tier 1 buy is probably around 570-ish, and I would be adding probably above 580, 582 for a move back to 600. That would be the strategic play I would be looking at. From other best in breeds, Amazon, I still think at this point in time had a nice move, broken ascending channel. And you can see that ascending channel right here. I put it on, broke it 3 days ago. So look for a little back test back to 215 or some sideways action for the next few days. I don't know if there's really a trade for us to look at. Around 215, I will start to visit the trade again on the long side. Not necessarily shorting it right here. If you are shorting it, use the 220 as some significant levels. 2 other high betas. I mentioned that we made some good trades this week. I was involved with Priceline. I talked about it around 620, 625. I started buying it, held a little pain down to 600, which was the 100-day, and I sold it yesterday at the open right around 650 and change. Nice big travel range. Obviously not the easiest stock to trade, but it's still best in breed. So I would be looking to get back involved with this stock on the long side. Didn't short it, even though it was interesting to short yesterday morning. Probably around 625. That means we're $10 away from my buy price. Could there be some cute shorts in there in the process? That's certainly open for interpretation, but might be in the cards. Banks. Well, let's put up FAS, the ETF, as the first and foremost. The banks, it's really hard to pick and choose what bank's really going to outperform that day. Use the ETF. We use it all the time, the FAS. On the other side, you can go with the FAZ or the SKF. But the FAS obviously had a big 3-day travel range. Hit its 21-day moving average, came right back down. Again, the back end filling, I think, is in place. Look for 75 possibly as a new buying opportunity. I don't know where it's really at trading this morning. I think the action is going to be muted over the next few days. I would expect to see a higher low, certainly in place for the banks, but at the same time, I don't know if there's going to be a A+ long right now. So I would just watch and wait and see. Commodities had a decent 2-day move and 3-day move. They have broken, Schlumberger I put on my radar, found a nice base, looks like 61 is a low at this point in time. So if it back and fills back to 63, I'll be looking to probably get involved. If you can notice, I'm not really talking about throwing on new shorts yet. I have to wait and see, even though that could be in the cards also. But I expect a higher low in this tape overall, at least for the next few days, and then we'll have to wait and see how the market reacts, certainly how the economic news, certainly how the world news plays out accordingly. So I watched some Schlumberger and Exxon. Exxon I would expect a move possibly back to 79.50 as another opportunity. Again, these are $1.50 away, so if you're in the mode to short, just make sure you have your risk parameters in place and make sure they make some sense, because again, a short against 80.50, against using 81 as a stop, down to 79.50 might be a decent idea for some people across the board. Home builders, again, 3-day move, 2-day move, little digestion. I think it's just going to be a little back and forth. So overall, my general theme, I can keep going through all these charts. We're in that tough range where you had a nice snapback off oversold readings, three-day big move in the S&Ps, big move in stocks. Yesterday was that uptick, sell the up move. Most of these stocks went negative or minimum. Obviously, put in that big red bar that we like to see. That means a stop in that momentum temporarily. And the next few days, you're going to have to wait and see, and you're really going to have to wait and find your opportunities. I came in today with about a 3, or on a scale of 1 to 10, about a 3 in terms of what I'm expecting for the day and finding good ideas. With that being the case, less is more. The one key to trading, and the one key I keep pressing every single day for people and traders, new traders, old traders, is find your 3 best ideas and make sure you capitalize on those 3 best. And if you come in with very little conviction, most likely you're going to end up on the losing side of the trade. You need to have conviction. The buying something that pops on the radar on the upside or the downside, quite frankly, right now is not working. I don't expect it to work today. So understanding that it's going to be a slow Friday and a summer Friday, keep things intact. And I think pay attention to virtual trading floors, certainly if you're trading live, because I think that's a little bit more important and pertinent over the next few days. I don't think you need to really put any action area trades in place. Some of the stuff that I've been holding, the Microsoft and the Ford on the long side, not really interested. I took a little bit off of Microsoft yesterday, but I'm looking for a move back to 30. So comes back down to 29. Maybe it's there this morning. 28.75. Probably get back involved a little bit. Again, I'm long from the 50-day, which is about 28.55. It's a little bit slower, a little bit, stuff that people can get involved with. Same thing with Ford. My price target was around 11, 10.80 to 11, so I took some off around there. But I'm still in, over half my position, and at this point in time, I'd like to see it hold above 10.30. But I'm in from around 10.15, and we'll have to wait and see. So the key is putting some certainly high betas into play that you can make some lots of cash flow on, and then you find some slower ideas that, quite frankly, aren't as energy intensive, and you can just let the prices play themselves out accordingly and go from there. The last one I will mention, and we were talking about it, had past its the top end of its Bollinger Band, the TLT is a 20-year, got a little out of hand, came back to earth. The key is a little bit, it's back down to, went from above 130, I covered my short around 127, 126.50. So obviously it's gone a little lower since then. The key is, for a longer term trade, I don't know if the top was in. I can't really tell at this point in time. A little digestion over the next few days. Really, I don't think there's a whole lot to do. Maybe there's a buying opportunity. but using 124.50 as my level to buy, or against my level to buy, possibly move back to 127, or just a little bit of back and forth trading for another move, down might be in the cards. It's not there yet. That's my point. So good luck today. Certainly we'll be on the virtual trading floor if you're a little bit more active, and have a nice weekend.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.